Let us break down today's action. What a busy day, huh? Unbelievable.
Crazy.
Particularly that last hour. Alan Bond from Jensen Quality Growth Fund joins us. Mike Binger from Gradient Investments. Jason Rodman from Lido Island Advisors. And Todd Horowitz joining us from the pits of the CB. Todd, I know you're dying to talk about the market. However, I want to start you on oil because yesterday we hit $44.20 a barrel. That was the lowest number we've seen in 6 years. It looks like, with today's takeoff of almost 5% on oil, looks like a turnaround. Looks like oil found a bottom. And am I wrong on that?
Hi, Dave. Hi, Liz. I don't think you're wrong. I know we're somewhere in the neighborhood. As I've written to you before, I thought oil was going to try to find a bottom somewhere here, maybe a little. We may go down to 40. Today's real action was more a little bit of a dead cat bounce, a little bit of a short squeeze, plus this was an expiration day, so we got a little exaggerated price volume. Bottom line is, though, somewhere in this area, that 45 level looked really good as a spot to buy oil. And as I said, I like oil here, and I think that I'm looking to buy it, not to sell it. I'd much rather be long oil than short oil from here.
Alan Bond, you've had your eye on the volatility. It is not a surprise that we've seen it today and yesterday, but why is this happening? Because it certainly has ramped up since the first part of the year. It changes in, and I guess you could say the macro themes, everything out there seems to be shifting a bit.
Yeah, definitely. We see the volatility over the last few days and over the last few months really is really part of a broader shift in the market. We're nearly 6 years into a very strong bull market. We think much of that has been really underpinned by extraordinarily accommodative U.S. Federal Reserve policy.
Okay, you sound very calm. Let me just say, are you're going off on a narrative that seems we believe the Fed, but what happened today and yesterday? What is truly going on at the heart of the matter?
Well, I think you talked about it earlier. I think a lot of the volatility we've seen is really the market trying to react and figure out what's going on with oil.
Okay.
We'd been in a situation where oil prices had been high for a very long time. They've collapsed. It's created a different environment. For us, we don't own energy stocks. We like to stay away from that volatility and really focus more on companies that have pricing power and have consistency in earnings and free cash flow.
But Jason, I want to talk about that for a second because are oil prices driving this market downdraft, or are they just a reflection of what is happening more broadly in the world economy?
Neither. I think oil prices are acutely responding to the fundamentals that are present in the oil market, almost, believe it or not, regardless or irrespective of what's happening with corporate earnings. It's a very serious fundamental issue with oil.
Okay, so
OPEC
is it totally separate? Let me just focus on the market for a second now. I don't want to get too in the weeds on oil here, but is the market, what is happening in the market at all tied into what is happening with oil?
No, again, not really. I think the reason why the market sold off so much today is really two main reasons, with kind of a third thrown in there as well. The two main reasons are, number one, retail sales. Obviously, everybody knows that, traders are very short-term focused. When they see a weak retail sales number and the S&P's above 2,000, those two things really don't match up. Number two, the IMF is now vocally concerned about global growth. The central banks around the world are having a lot of trouble stoking inflation and stoking growth, and that really ties into the third reason, is global growth is really not what it used to be. So the market is having a little mini correction, and that's understandable.
But there are always ways to make money, and I want to bring in Mike Binger. Mike, you're a portfolio manager, and this stuns me. You put in a pick this morning, and the pick was GameStop on a day where retail sales got hammered. GameStop, which is a very volatile name, was up 10 full percentage points. Let's talk about why you picked that, what led you to that name, and where you see the broader picture of the economy here.
Yeah, well, I think stock selection is really key this year. I think it's going to be, like some of your guests have talked about, just in the past few minutes, it's going to be harder and harder to eke out gains in the U.S. market. So this year, I think stock selection is really going to be key. But I also think you really need to try and be more tactical in how you go about allocating your money. If you put my feet to the fire, I think there's more opportunity in the next couple of years in sectors around the globe. So you need to be prepared to rotate your money a little bit, reallocate. But back to GameStop. GameStop. I think GameStop is a great example in the U.S. It's one of these stocks where you already have the earnings are out of the bag. They came out, they announced a great holiday season. The stock was way down. I think, that games are still going to be sold in brick and mortar stores. They're buying back stock. They have dividends. That's great. It's cheap. It's below 10 times earnings. I think it's going into the mid-40s from here. So even though it's up to around 36 now, it's a buy.
But Jason, to Liz's point, that folks are starting to reallocate their portfolios in various ways, looking at the market, realizing, for example, the high beta stocks are not doing that well. There are exceptions, but you look at what's happening with Tesla, for example. Yesterday, Elon Musk said he's not going to make a profit until 2020. And the market, of course, reacted today. He was down about 6%. I mean, he's always been in the custom of talking down to stock price. But again, these high beta stocks like Tesla are the ones that maybe you should be avoiding right now, no?
100% agree. And kind of the flip side of that coin is, well, what should you not be avoiding? What should you be buying? And that's what I'd like to touch on real quick. I think an interesting strategy that I'm looking at that I recommend everybody kind of start to look at is when the market is down 1% or 1.5%, which is what it was today at its worst. I think it's an interesting thing to look at who is actually up on the day. What companies are hitting new 52-week highs? That's a pretty interesting thing to look at. And one company that I picked out to share today is Boise Cascade. Maybe nobody's ever heard of them, but Boise Cascade. Okay, Boise Cascade's a big company. They're basically been in the housing industry for a long time. They're a huge supplier of the raw materials for new homes, lumber, etc. They're hitting new 52-week highs, new all-time highs today. There's a new CEO.
Why would you want to pick a stock in a market that seems to be moving downward that's hitting its new highs?
Well, because that shows that the market likes that stock. I mean, it's like Mr. Market doesn't lie. That shows that the market is putting money into a company that it believes in. And there's a new CEO coming on board in March. And I think if Bill Gross is right, and we do have low interest rates for the immediate to medium-term future, we're going to see a continued uptick in housing, and that should benefit Boise.
Speaking of which, low interest rates, everybody saw the 10-year yield dropping. We know that the Japan government bond yields, German, French yields, all dropping. The UK's 5 and 10-year also hitting near record, at least near record, near historic lows here when it comes to the yields. Let's get back to Todd Horowitz on the floor at 1.84%. We had Andy Brenner in the last hour. He's pretty much an expert on fixed income, but he said, look out below, 1.5%. Does that mean that people are making a mistake simply by rushing into a safe haven of treasuries when you're barely getting any yield?
It's very interesting, but one of the biggest problems, and this is the whole problem that equates to the globe, the 1.5, which I agree, and I said that last week, I think we're going probably the 1.5, maybe even lower. The problem is that the German bonds are at 0.45. Japan bonds are at 0.25. So if you're going to put your money into bonds, you're going to come to the U.S. 10-year notes. The 30-year hit an all-time low today in rates, okay? So when we look at the overall picture, it's not a pretty global picture, which is still forcing up the dollar.
So GameStop,
we see these commodity space.
Go into GameStop.
Mike, I got to ask about retails because obviously that's what started the downdraft today, those awful retail numbers for December. And yet you were in favor of Alibaba. You would pick Alibaba, which is trading, by the way, it traded below 100 today. Other than the fact that maybe you catch it during one of the dips, don't the retail numbers concern you about a stock that depends on retail shoppers?
Well, the U.S. retail sales came out today, and they were a little disappointing. But Alibaba is really an e-commerce or an online sales company, and they're in the emerging markets, specifically China. I think this is a unique story. It's got an open-ended growth platform. I really like it. I've been waiting for it to pull back. I told myself if it drops below 100, I'm going to buy it. I missed it on the way up. It's dropped from about 120 to 99 today.
So you were buying today?
We're in. Okay. We're in. We bought today.
Good for you.
I'd be remiss if we didn't let Alan just quickly make a comment about the three names he likes: Ecolab, Becton Dickinson, and TJX.
Sure. I'll start with Ecolab. Ecolab's an interesting company. It's a business that sells chemicals mostly to institutionals for cleaning supplies, but about a third of their business is chemicals sold to energy companies. And not surprisingly, the stock suffered a little bit in the last few months with the decline in energy prices.
Yeah.
Okay.
We still think that's a very, very strong business, a consistent free cash flow generator. organic sales that continue to grow, and we think this is a good entry point for long-term investors.
Good stuff, guys. Alan Bond, Mike Binger, Jason Rodman, and Todd Horowitz. Thank you very much,
And
gentlemen.
we'll put all their picks up on
Appreciate it.
Facebook.com/afterthebell. Coming up.